Hey everyone, welcome back to the channel. Today, we're going to dive deep into one of India's leading steel product manufacturers, APL Apollo Tubes. If you've been eyeing this stock or are already a shareholder, stick around as we break down its fundamentals to see if it's a good investment. Let's jump right in. First, a quick overview. APL Apollo Tubes Limited is one of the largest producers of structural steel tubes in India. The company has a wide product portfolio ranging from galvanized tubes, pre-galvanized tubes, and hollow sections to precision tubes used across multiple industries, including construction, infrastructure, and automobile sectors. With a market presence of over 30 years, it's a key player in India's booming infrastructure sector. Established in 1986, APL Apollo operates in the steel tubes and pipes industry. Their product categories include hollow sections, galvanized steel tubes, and precision tubes. APL Apollo holds a dominant position with strong distribution channels. Let's get into the numbers. A company's financial health is the backbone of any stock analysis. Here's a look at APL Apollo's recent financial performance. The company's revenue has shown consistent growth over the past few years, driven by increased demand for structural steel in India's infrastructure projects. In the last fiscal year, APL Apollo reported revenues of over 14,000 crore rupees, reflecting a steady year-on-year growth of around 15%. In terms of profitability, the company has an operating margin of around 10 to 12%, which is quite stable considering the competitive steel industry. However, rising input costs can be a concern, especially since steel prices are often volatile. APL Apollo's net profit for fiscal year 23 was around 700 crore rupees, showcasing its ability to maintain profitability even with fluctuating raw material costs. The net profit margin has hovered around 5%, which is respectable for a capital-intensive industry. Now, let's talk about the company's debt levels. A high level of debt can be risky for investors, but APL Apollo has managed to keep its debt-to-equity ratio under control. Currently, the ratio stands at around 0.5, which is a good sign of financial discipline. The company has also been working on reducing its interest costs, which should improve profitability in the long term. A healthy balance sheet means that APL Apollo has room to grow without taking on significant financial risks. One thing investors always ask about is dividends. APL Apollo Tubes is not a high dividend-paying stock. Its current dividend yield hovers around 0.4%, which is modest. The company has been focusing more on reinvesting profits into expanding capacity and improving technology. While the dividend may not be the main attraction, the stock has given impressive capital appreciation. Over the last 5 years, APL Apollo stock has more than tripled in value, making it a growth story for long-term investors. Now, let's look at valuation metrics. The P/E ratio of APL Apollo Tubes currently stands at around 40, which is higher than the industry average. This indicates that the stock may be overvalued compared to its peers, but it could also be because the market is factoring in its future growth potential. At the same time, its price-to-book (PB) ratio of 8 also suggests a premium valuation. Investors are willing to pay more for this stock because of its strong growth trajectory and leadership in the sector. So, what's driving the stock's high valuation? Growth potential. APL Apollo is expanding its capacity, improving its production efficiency, and launching new product lines that cater to emerging sectors like affordable housing and infrastructure. The Indian government's push for infrastructure development, such as the construction of highways, smart cities, and metro rail projects, will likely create sustained demand for steel products. APL Apollo, with its market-leading position, is well positioned to benefit from these trends. Of course, no stock is without risks. One key concern for APL Apollo Tubes is the volatility in steel prices. If raw material costs surge unexpectedly, it could pressure margins. Additionally, the company's high valuation makes it vulnerable to corrections if earnings growth does not meet expectations. Lastly, competition from other steel manufacturers and government policy changes on imports and exports could affect its market dominance. So, is APL Apollo Tubes a good investment? If you're looking for a growth stock with strong fundamentals, leadership in its sector, and exposure to India's booming infrastructure, this stock is certainly worth considering. However, keep in mind the high valuation and the risks associated with steel price volatility. Do your own research, consult with a financial advisor if needed, and invest based on your risk tolerance and long-term goals. If you found this analysis helpful, don't forget to like this video and subscribe for more stock analysis and market updates. Thanks for watching and happy investing.